as long as you earn an income. Education tax. So the legislation says 18 to 65, but it really is in respect to an employed person. And seeing that you'll be considered to be self-employed, then as long as you are earning an income, the education tax will be payable. The other note that I was going to allude to was the minimum business tax, but he clarified that. So it is in fact a credit, but it is the last credit that you can claim. And if you end up in a loss position, you can not then add the minimum business tax to your loss. Yes. Alright. Minimum business tax. Caesar is a mighty title. Minimum business tax. So the basis of the minimum business tax is, well, let me give you a background to the minimum business tax. In 2007, the sitting government at the time, it should have been the Jamaica Labour Party, was attempting to engage the International Monetary Fund in a loan arrangement. However, when they presented pertinent information to the International Monetary Fund, the fund said, you don't need a loan. Yes, thanks. The fund said, you don't need a loan. You simply need to be able to collect your taxes, increase your rate of compliance. One of the particular statistics that the fund was looking at was our company's office database. At the time, it indicated, just hypothetical numbers now, that we probably had about 10,000 registered businesses, hypothetically. So from that data, they were saying if you have 10,000 entities operating as companies, then potentially it's just a situation where persons not paying their taxes. And when they looked at average tax payment, then it will be looking at a good sum. But when we drill down into the data, we recognize that of these 10,000 or so registered companies, there were only 2,000 active companies. So that's a significant skew in projections. So, the technocrats at the time were now attempting, how do we get persons that have registered businesses and are not trading to come off the company's run? Because persons were saying, I have a business name, I have a business idea, and the name goes with the business idea. So if I deregister the name, then that will be severe damage to me. So what we had on the listing, in the hypothetical number, schools, persons doing their SBAs, persons going to university, creating companies for dummy purposes. So that's one. We also had persons, as I said before, they liked a particular name. They might not be wanting to do a business right now, but they say, that's the name I want, and if I can pay a fee for it so that nobody else has it, then I'll do that. And the last situation we have is where persons actually started up a company, the company shut down, but they didn't remove themselves. So, part of it, and I'm just breaking it down as simple as possible. The ideas took root that Jamaicans tend to, if we attach a figure to something, they tend to move. So, therefore, the minimum business tax. It was born out of that situation to ensure that the company's role is actually projecting actual businesses. So, 30,000 as at June 15, 30,000 September 15th. It is a tax credit after you've taken all other tax credits. You cannot, if you end up in a loss position, you cannot add it to your loss. It will then just simply be set off. That is your contribution to national development. So, yes, quite so. Because, and we're being practical in the technicity of it, in that you have so many companies listed, not trading, but it's skewing your projections. So when we implemented the minimum business tax, there was a run on the Companies Office of Jamaica. Because what the legislation says is that even if you are not trading, as long as you're on the roll, the minimum business tax is applicable. So as a result of that, there was a run on the Companies Office of Jamaica, and we are now more or less on the lines of active businesses on the register. Alright? So that's the basis of the minimum business tax. As he said, individuals, it has to be, you have to make income exceed $5 million, and there should be no salary component that brings it to the $5 million. It's raw revenue. Raw revenue that takes it to $5 million. And in the case of companies, they get a 24-month time frame in which before they have to pay the minimum business tax. Clarified? Clear? As mud? Good. Good. Alright. So I've been charged, we have a threefold presentation this morning, but we're going to start with the heavier of the information, which is in relation to what I think most of you will be concerned with, which is the submission of your SO4 if you're an individual. Alright? So we prepared a case, and the case basically brings into full context not only your situation, but potentially somebody that has several income streams. So I remember once we went into a presentation and we prepared a case that had income from several sources, and there were some particular groupings within the group that took exception to say that tax administration is assuming their income. That is not the position, it's purely hypothetical. We're simply just trying to inform you as best as possible if you have an income stream that is related to that. Okay? So please, take no offense to the figures and the amounts. Alright? So, this 58-year-old architect, Ms. Geneva Lopez-Smith, she has several sources of income. And what the legislation says is that for a Jamaican citizen, you are to report on your worldwide income. Yes, worldwide income. All sources. So if it is, say for example, based on your expertise, tell me emerging marketing realty. Abu Dhabi. Arab Emirates. So because of the specialization in Jamaica, somebody wants to snap up the talent because they want to build some islands and they wanted to sell the islands. So, you're here for 6 months, generating some business, sold a few properties, but then 6 months after you get a request, you're needed in the Arab Emirates to facilitate the process of selling these properties. So you're here for 6 months and you're away for 6 months. You're domiciled here, your family, everything still exists here. When you come back, so let's use 2017 as an example. When you come back 2018, you are supposed to make a declaration. You'd have been required to make a declaration on the income that you've made here already, but the legislation says worldwide income. So you're going to have to incorporate the income that you earn in the Arab Emirates. Sufficient to say, let me just put this in. We have established tax treaties across the world. So if it was taxed in that jurisdiction, you won't be taxed again. You're simply making a declaration. However, if there's a differential in the tax rate, then you'll be required to pay that amount. Yes, our tax rate is 25%, and because of expansion in those countries, some of them tend to have different rates, are a little bit less than ours. So say for example, theirs is 20, you'll have to pay the additional 5%. Yes. Alright, so let's look at the case. Remember now, purely hypothetical. So from her private practice, she made $36 million. She also has a property that she rents. She generated $2 million from that. So she also invested some of her money in buying shares. So from GK Foods, she has $900,000 that she got on her ordinary shares. Dividend, sorry. She also works as a lecturer at UTEC, and she made $3.5 million there. She's engaged in a partnership. She made $2 million there as well. And she has director's fees. She's non-executive. So basically, because she has all this expertise, she lends it to businesses by sitting on their boards. Alright? Now, we want to point out a particular difference in relation to a non-executive as to an executive director. Generally, executive directors, their funds are charged through the business, through the normal payroll system. So we don't ask those persons to file a declaration, because generally it is taken care of at source. But a non-executive director only appears when there's a board meeting, something of that nature. They generally get director's fees. The withholding tax process should work where the deductions are taken at source, but sometimes it's not done. So we ask that a declaration be made, because potentially it is additional income. Just a room check. Am I going too fast? And your understanding. Because if I don't do anything else, I would have failed you. Alright, expenditures. So, I'm not giving you a broad category, or I'm not giving you a breakout, but expenses relation to our private practice, $12 million. Expenses in relation to our rental income, $300,000. Capital allowances of $350,000. Covenanted donations of $1 million. Other donations to a registered charitable organization, $500,000. And she's carrying a loss of $5 million. Deductions that would have been taken at source. PAYE from UTEC, they took $434,340. NIS, the maximum $37,500. And she also contributes to a superannuation scheme, as Mr. Galbraith had indicated, of $350,000. That is an allowable expense. Deductions are NHT contribution of $70,000, education tax of $70,031. And the reason why we want to put the figures that would have been deducted at source is because what the form is attempting to do is to calculate your total obligation. So if payments were made beforehand, you'll get the benefit of that, so that it reduces the amount that you'll have to go out of pocket. Good. Estimated tax paid. And Mr. Galbraith had also alluded to this, that it makes sense that you pay over the course of the year. Because what it does, it provides a little leeway in that you don't have to find a lump sum. Especially in relation to the NIS, the legislation says paid NIS contributions. So if you haven't paid it, and it is at the point of filing your return that you're going to calculate it, it will not reduce your income tax position so that you arrive at a lesser statutory income. Yes, has to be paid NIS contributions. Alright? But if you notice within this example, the NIS paid, estimated NIS paid would have been nil, because she's making $3.5 million from UTEC. So there will be no additional NIS to be paid. NHT of $300,000, education tax of $320,000. Alright, so we're going to go to the form now. I'm going to be a little bit presumptuous. Let me not take anything for granted. So for those of you that have your smartphones with you, and you have internet connectivity, at this point I would want you to go to our website and pull down the income tax form. And we're going to populate it accordingly. Yeah, man. There's always tax. The only other thing I'm sure as tax is debt. And I said, and I can only say that with a smile. It's fine. Alright. So for those of you that can, the website is www.jamaicatax.gov.jm. And our selling point on that is that we offer the facility of submitting your return online. So you don't have to deal with the long lines in the offices from the convenience of your home office or your car, dependent on Wi-Fi or internet capabilities. You can submit your returns online as long as you have your information.
Can you please repeat?
www.jamaicatax.gov.jm. Alright, and the form is called the SO4. Good. Now, what the form is attempting to do is to capture as much information in relation to within particular categories. So we don't want to take for granted the general section A of the form, which is general information. Now, I've had a situation before. I've been in a room and I've said we're not taking general information for granted, and somebody said, no, but everybody should know they should put in the information. Can I tell you that not everybody knows? Yes. Not everybody knows that the information at the top of the form is pertinent. Pertinent because if you do have an NIS, then the contributions to NHT and NIS, they are matched with that number. So we're going to get to a place come 2018. Is 2018 is the one number, NITs. They're about 2018, 2019. But for now, we still have a functional system where we have two separate identifiers for persons that are engaging in income generating activities. So there's the taxpayer registration number. And please, people, for those persons that still saying TRN number, you should now stop. Is TRN. So if you're going to say TR, you should say TR number because the N at the end stands for number. So it's taxpayer registration number. Alright? Yeah. Some people still say TR, I can get my TRN number. And I'll try as nice as possible. So you know the end is already so. Number. Alright. But it's something that we often make mistakes with. Like people say reverse back. Yeah. Alright. So we're not taking the general information for granted. So we're putting in the name. Last name Lopez Smith. First name Geneva. Middle initial. General. We ask for the name, but most person just put the initial. The NIS number, and for individuals, I have to always point out this. The individual NIS is alphanumeric. So it starts with a letter and is followed by 6 numbers. For a business, the number is straight numeric. 7 digits. Alright? The taxpayer registration number is 9 characters. Now, when you're filing the SO4, it is you as the self-employed person, so you don't need to put the 001 at the end to say that you're trading hands. Alright? Then the home address, business address in 5. Are you a resident of Jamaica? And that is pertinent because non-residents don't get the income tax threshold. So if you're not a resident, you have to highlight that particular box because the system doesn't automatically give you the benefit of the income tax threshold. That is only for Jamaican residents. Alright? And I think some of us should be aware of particular protocols in relation to other countries, especially the US, where you have to make a declaration wherever you earn money. The reference in history when we were in high school was manifest destiny. So it is now being introduced in the format of FATCA, Foreign Accounts Tax Compliance Act. So wherever you are, whatever you do, as long as you're a citizen, what they actually say is that financial institutions that you deal with have to report back to them any amounts that they're holding in their banks for you. Yes. So residency is important. Telephone number. The reason why telephone number is there because person said, hey, tax admin want to know all about business. Sometimes there can be errors, there can be changes, and we need to contact you. I remember when I was in the accounts management unit, that's where we do adjustments if there is something wrong on the form. I attempted to contact one taxpayer. It took me about 2 years to find the person. I mean, we were able to adjust the system effectively. It's not as though, but one of the things is that persons don't like to get notations from tax administration. So potentially you'll be getting several letters in your mail saying that your return is wrong and your obligation is 100 million and you only make $1,000. Potentially person that push up people blood pressure. So all we're saying, provide us with information so that we can touch base, find out what you were intending to do, why this is on the form, so that we can reconcile it in the shortest possible time. Alright. Email address as well, because we have that facility online. Your trade name, if it's different from, because some persons don't want to use their name, so they use another address. So this would probably might be Geneva Lopez Smith trading as architect in need or something like that. Or occupation, architect. The tick if applicable, new address. So when you register you had a particular address, you change it, just check that line item. Alright? And the next box is of particular importance, revised return. Now the legislation gives you the provision to amend any document that you submit to tax administration once you would have found the information that makes the first submission redundant. So basically what you would all have, so say for example you file a return early, 1st of January you file a return, but you didn't have one part of the information. So when you get that, you've adjusted your income statements, your income tax computation, and it reduces your tax obligation. You simply just write a letter. When I filed my initial submission, I did not have all the pertinent information, attach it, check the box, we'll then do the requisite adjustments. So that's very important. Don't check the box if you're not doing a revised return. The system views them differently. Alright, so Section B is the summary of income. Now one of the particular things that you'll find about SO4 for 2017 is that we've changed the numbering. So each page starts at 1. So in relation to the summary of income, what we are attempting to do is to bring into context all the information from all sources. So the first line item is income from trade, business, profession, and vocation. And we indicate their gross receipt sales income. Now this would have been dealing with her private practice. This is private practice money. She made 36 million, and because she's rendering a service, she wouldn't have cost of goods sold. Generally when you have cost of goods sold is when you're involved in buying and selling. So she would not have cost of goods. So her gross profit would still remain at 36 million. But she, however, would have business and administrative expenses. So some things that were referred to earlier: marketing, traveling costs, insurance, that type of thing. However, as Mr. Blager, it did indicate if you use your personal vehicle or personal assets in the performance of the duty and there is a domestic element to it, then you have to do an apportionment. Good? What is attributable to the business and what is attributable to the business and what is attributable to home. So as best as you can, if you can separate them, that would be good, that would be excellent. So if you have a cell phone directly for business, you get all of that. But if you share a cell phone that is both personal and business, then you have to apportion the cost. Good. So total expenses, $12 million. Now, as was described earlier, there is a computation for a raw accounting circumstances, but for tax purposes, we don't recognize certain things. So we don't recognize depreciation. And the reason for that, All of us in the room might use a computer. But based on the usage, in my estimation, I might say it is going to depreciate at 40%. Somebody else says 20, somebody else says 30. What happens there is a disparity in relation to tax computation. So what we have done is give you capital allowances, which is standard rates for particular types of assets. Alright? Yes. So net profit is 24 million from the trading activity. Her share of partnership income, as indicated there, is $2 million. Then now we move to income from rental of property. So our gross rental is $2 million, but in order to facilitate the property being conducive to living, you have to make adjustments. You have to repair the place. We give $300,000 for that rental expenses. Now, an essential element of attempting to report your income is that we know tax administration is not lacking in any knowledge compartment where that is concerned. That to make money, you have to spend money. So, but all that we're asking for you to do is to indicate to us those streams of money that were spent in relation to the particular income stream. So that's why it is important that you, as best as you can, to separate business expenses from your domestic expenses. Good. So the net rental income is $1.7 million. Now we get to income from all employment and offices, and she was employed at UTech, right? That's $3.5 million. Now I'm going to attempt to give you a breakout of what some of these lines mean in relation to the income from employment and offices. Cash allowances, traveling, housing, entertainment. Now, say in your particular situation, you have to take a client out for lunch. From an employed perspective, you could not take the client to lunch and sit and watch them eat. Yes, you have to eat as well. That's entertainment. But in an employed situation, we add back the benefit we add it as a benefit and then tax it. So only the portion that is consumed by the client would be an expense.
What?
Now let me clarify. Look at the particular line that we're dealing. What is the stream of income that we're dealing with here? What is the stream of income that we're dealing with? Income from employment and offices. That is why the form is structured in the manner that it is structured. So this would apply to your particular situation. I'm simply alluding to what would transpire in that particular situation. Clear? The form represents income from several streams of income, right? What we're dealing with now is what would be attributable to somebody that is employed. That's what I'm explaining now. This particular section. Good now? We're good now? Alright. Now, there was and for those that are saying, why that kind of wicked, we tend to make things bad for ourselves in Jamaica. And let me explain. There was a time when rent was tax-free for an employed person. Right? Remember those days? If you work in a particular company, they pay rent for you. So you know what happened? Nobody got any salary anymore. Everybody was a straight rent. So in order to address that anomaly, the legislation was changed. All allowances are taxable. Good? So you allot it to income, but then on the other side, it can be expensed out. So for every action, there is an equal and opposite reaction. So while in the first instance, the upper, if I eat and they go and charge, yeah, but you're going to get an expense side on the back end. Alright? generally there is always a neutralizing effect. Alright, good. So if you also get a perk, so you get a credit card in an employed situation, say the value of the card is 100,000. Only what you use will be attributed as income, and that will be taxed. Alright. Annual value of quarter of residence. Now say for example, you are a director of a particular business, and they have a house that they say once this person is a director, you have to live here. Then simply put, you would not have to expend anything in relation to that home. They buy your grocery, everything in relation to the home is taken care of. What the Income Tax Act says is that what we will do is say, find 30% of your chargeable income and just add it back as your benefit in relation to the quarters. So we find 30% of the 3.5 there and just add it up to it and then tax it. Alright? Now, emphasis again, this is only in relation to income from employment and offices, but potentially it's good information. Alright, so total income from all employments and offices in Mrs. Lopez Smith's case is 3.5. Now, Mr. Murray is going to come at 1,500. But what the legislation says in relation to NIS is that if you get to the maximum, your employer also pays the maximum. And from that perspective, it will be deemed as though you contributed the full $75,000. So there will be no additional calculations with reference to NIS. Clear?
No.
NIS?
One more time.
Alright. This person made 3.5 million from her employed situation, but she has additional sources of income that NIS will be calculated on. But because she reached the maximum in this situation at her job, she reached 37,500. Legislation says for a self-employed is 5%. But in this case, she paid 37,500 already. Her employer would have to match the contribution of 37,500. It is deemed as though she would have paid that entire $75,000. So there will be no further calculations for NIS. Clear now? Good. As we move along. So, NIS as well as contribution to an approved superannuation or pension scheme are allowable deductions to arrive at your statutory income. So if you notice, we're going to take them off. So 37,500 as well as the $350,000 that should have contributed, and you can't contribute more than 20% of your gross income. You can contribute more, but we're only going to allow 20%. Alright? So total deductions, 387,500. So her statutory income position for calculation of taxes and contributions is 3,112,500. Right? We just put in these other categories so that you see the effect. Income from investment and other sources. So remember, she got some dividends from GK Foods. 900,000 is represented there. If she was getting a pension, it will be denoted at that line. So what basically you find, what you notice here, and I want to mention the non-executive director's fees which we are given, is that basically what we have done is attempted to format the form in a way that it captures all sources of income. If you say it cannot be classified on this form, we put in a nice little box that says other income. Good? Because this part of the principle though that you don't hear a lot and that we have to be putting out there constantly is that you only pay your fair share. Not more, not less. taxes and deductions will be computed in relation to what you earn as your income. But the legislation also says that it's a self-assessment system. So you tell us what happens, but the legislation also gives us the right to verify it. So the impetus is always on you. Alright? If you need clarification, if you need assistance, there is always assistance. Either through tax administration or any other professional platform such as GDS. Alright? Don't sit and attempt to fiddle out this thing for yourself. It can be daunting. Well, the information is put in a particular space, but there might be you might need some analysis, you might need a breakdown, and then you might need a person. So the information, alright, let's be very blunt. The legislation and the information, unless you have an accounting background, is very high. So you wouldn't need assistance. Alright? And these days the legislation is in fact changing.
Mr. Brennan, may I just ask members to hold a question and answer? I want to do the presentation and then just make a note of your questions and then we'll put them afterwards, okay? Because we have to get through. Please? Thank you.
Alright, good. Alright, so total income from all sources would amount to $33,212,500. So the first thing that comes out before we engage in any calculation is capital allowances. Now, one of the things, as I started, I pointed out that the numbering starts back at 1 on the second page. Notice that. Because we don't want to, because in previous forms we tell you that this figure on page 1 is supposed to be on page 2, and that presented a challenge. So we reformed it. Every number basically has a position for itself, so you can easily trace it back. So capital allowances, now these are the rates that we give you to say that based on the assets that you utilize in your business, this is how it's going to write off over a particular time frame. Alright? So that's 350. Covenanted donations. You guys are in property, so you deal with terms like contract and covenant. Anybody want to take a shot at what is a covenant?
Covenant is a contract.
Alright, so let's take it too long. A covenant means it is similar to a contract, but it's not the same thing. You agree to do it unconditionally, but in effect, it is something that is binding. So, in relation to covenanted donations, these donations have to be to an educational institution, and you have to agree that for 5 consecutive years, you're going to make this contribution to the school or educational facility. And it has to, the document has to exist. So it's not a contract that you want to break, like how people treat marriage like it's a contract. It's a covenant. It's a covenant. When it's good, when it's bad, you work with it. Yes. I know that's a topical one. Yes. So, you have to agree whether or not you make a profit or not, you're going to contribute $1 million every year, 5 years consecutive. Alright, so once you agree to it, you get it. $1 million. So that reduces your total income from all sources, less the capital allowance and the covenanted donation. Now there are pension exemption, age exemption, and other exemptions. Now, pension exemption, if you are in receipt of a pension, you get this additional $80,000. And it doesn't necessarily mean that you're retired. Government doesn't do redundancies, they make you pensionable. So I can be 29-year-old. I can be a 29-year-old that is getting a pension. But I can only offset the pension exemption against the income that I'm getting from the pension. No other source. That's a pension exemption. But if I'm 55 years and getting a pension, I can offset my pension exemption against all sources of income. So the restriction is if you're below 55 years. You get the additional 80 against all sources. The age exemption, once you've attained 65 years, you get an additional $80,000. So in total, the threshold plus 160 if you're getting a pension and you've attained 65 years. Other exemptions, and the reason why we've populated this particular line item with the 900,000, it would flow, not just go back to the first page for me. We got a dividend from GK Foods of 900,000. The form calculates tax at 25%. The tax on dividend is 15% and it is a final tax. So resultantly, what we want to do, we want to back it off before we do the computation so that the dividend component is not in there so that we don't charge 25% on it when really it was 15%. So that's why we've done that. Back to page 2. So that 900,000 is now an allowable deduction to arrive at statutory income. Then we look at allowable loss. Now in Jamaica, the legislation says that if you're a self-employed person, you can carry losses perpetually. So you can say make a loss every year. And in the year when you actually make a profit, you can offset your loss to your profit, but you can't get all of it. And that is why we have section D. It gives the calculation as to how you utilize the loss in the current year. So, say for example, Mrs. Lopez Smith had been carrying this $5 million for 5 years. 2017 now, she make a profit. So we ask for you to identify, was the profit being brought forward from previous year? Yes, 5 million. Do you have a current loss? No. So the total losses available is $5 million. But there is a notation. Is the business within the first 6 years, or did you make $3 million? If you satisfy that condition, then you can get the entire $5 million. But if you're outside 6 years and you've made more than $3 million, you can only claim 50% of your chargeable income. And let me just distinguish what is chargeable income. So the figure at line, Natalie, go back. Line 3, the 31 million, you'll find 50% of that. And that's 31, so it's about 15 point something million. So what the legislation is saying, you could only claim losses that came to 15 million or less. And in this case, the 5 million is way below that, so she can get the benefit of the entire 5 million to reduce her chargeable income position. Clear? Clear? Good. We have arrived at her chargeable income, which is $31 million, which would be total income less capital allowance plus the covenanted donation. She has a loss. If she were within the first 6 years of business, or she only made $3 million in sales, then she can get the entire $5 million against the 31. But the case, that's not the case. She made more than $3 million. What the legislation says, we restrict it to 50% of her chargeable income, which is the 31. So we find 50% of 31, that's 15. She has 5, so she can get the entire 5. Alright, so we complete section D and then we go back to C to put in the allowable loss, which is 5 million. Contribution to approved retirement scheme, she didn't have any of that. She did, but it was populated at her job in Super. Other donations. Now, these donations have to be to an approved charitable organization. And we only allow it if you made a profit. And we put a cap on it as 5% of your chargeable income. So you can give away as much as you want, but we are only going to allow you 5%. And it has to be to an approved pension approved charitable organization. So ask them for their certificate from the Department of Cooperative and Friendly Societies. Alright? Good. So now we have arrived at statutory income. I'm trying to ensure that I'm on time so that I can get the full benefit of the other presenters. Good. Now section E. Scroll up for me please. Now remember that gross income, that 900,000? No, scroll down. We want to go to E, we want to go to the computation. Good. So remember that gross dividend that we had received? We have to account for it. So the first line when we get to computation in section E says, gross dividend other than preference dividend received from companies resident in Jamaica. So with this figure, we want to put it on, take it off, put it on, and take it off again. So we put back the 900,000 that we had received there. And we're going to get to the basis of why we're doing that. Statutory income subject to tax rate of 0, 25, and 30%. And we put back the net figure of the 31 and the 5 million which we had at the loss. And we get $25,462,000. Now, this is a little trick that we use so that they don't get confused as to what is at 30% and what is at 25%. So if you find yourself in a position where you're above $6 million as your statutory income, what we say to you is whatever figure you have in line 2, you subtract $6 million from that figure and put it straight down to box 7 that says tax on net statutory income in excess of 6 million and 30%. And effectively what you do from there is work back. So if you take 6 million from 25 million, you get 90 million. Boom, we drop that right at 19, at 7. Nothing else to worry about. All we have to look at now is in relation to the 6 million, the 1,375,140, which effectively is the threshold tax-free pay, which is at 0. So what is going to be taxed at 25% is the difference between the threshold and 6 million, which works out to $4,624,560. 860, sorry. Caught that? Yeah. Make life easy. We don't work hard, we work smart. Right? Let me see the people that are still working hard. Still working hard? Need to get a life coach. Work smart. Alright? So what we're going to know, so what we're doing now is putting back the 900,000 at box 9, so that because it effectively is telling us the rate at which the 900 was treated at, which is at 15%. And we're populating. So once we've gotten that, so 1,371,40 is the tax-free pay that is at 0. 4,624, which is the difference between 6 million and 1.3, is 4,6, and we'll find the tax on that at 25%, which is 1.15. And then the big boy, the 19 million at 30%, and we get 5.8 million. So effectively what that is showing you is your total income tax position. So it's not saying that that's what you're going to pay. It's saying based on all your sources of income, that is what you should pay. There's a difference between payable and paid. So it's saying effectively that is what is payable on your statutory income. I will put that at line 11. So that's 7.1 million. Now we're going to deal with all those things which would have been taken out either at source or taken out before you actually had access to it. So the first thing we deal with is non-refundable tax credits. And it actually puts it in the line item there, excluding minimum business tax. Minimum business tax is the last one that you can claim. So, double taxation relief, remember we referred to the situation, Jamaica and Arab Emirates. They put in the amount that would have been taxed there. Contractors levy, and this is the real estate board, Real Estate Realtors Association. So if you find yourself becoming a developer, if you make payments or a subcontractor, if you make payments, you're supposed to withhold 2%. If payments are made to you as a subcontractor on a development, 2% should be withheld from you. It's a prepayment towards your tax position. So you see it pans out back here. Employment tax credit. So for those of us that employ persons, a self-employed person, you employ persons, you actually get an additional tax benefit for that. Previously, it would have been the employer's contribution. So for every one of the taxes and contribution, except income tax, the employer contributes towards it. So for NIS, it's 2.5% for the employer, 2.5% for the employee. NHT, 2% for the employee, 3% for the employer. For education tax, 2.25%. For the employee, 3.5% for the employer. What the employment tax credit says is that if you pay every one of your monthly remittances on time, then you get the benefit of that total payment, as long as it is less than 30% of your chargeable income position, you get that entire payment as a tax reduction. Not only the portion that you paid, but the portion that was deducted from your employees. Isn't that a good thing? Yeah, man. That reduces your position. Alright. Asking for a repeat. NIS, employer pays 2.5, employee pays 2.5. NHT, the employer pays 3%, the employee pays 2%. Education tax, the employer pays 3.5%, the employee pays 2.25%. Legislation says that if you paid all of these on time, I'm going to give you a further tax reduction by allowing you to claim the total amount that you would have paid, as long as it is less than 30% of your chargeable income position. So the figure that we would have found, the 31 million, find 30% of that. And based on this, she would have paid $450,000 for the year. So she can in fact get that full $450,000. And the heart component. Yes. Because if you see heart and a pay slip, that person robbing you. It's only the employer pays heart. Alright? Good. So we've taken out the employment tax credit. Now tax deducted from dividend other than preference dividend. So we're going back to the GK dividend. And this is where we record it. 135 million. So our total non-refundable credits is 585, which reduces our tax on our statutory income less the non-refundable to 6.5. So we see that she's benefited from deductions that have been made at source. Then we go to refundable tax credits. PAYE tax deducted by her employer, which UTEC did on her behalf, 434. She didn't have any other distributions. And let me tell you what a distribution can mean. In the case of directors, there's oftentimes when directors take loans from the companies that they operate. What we're saying, as long as you pay back the loan, everything alright. But if you don't pay back the loan, we're going to charge it to the director as a distribution and tax it. I tell you, tax administration has become a creature of adaptation. So when people start doing like these little funny little things, we just have to try and just streamline the process. Alright? Tax deducted from gross interest received. So if you have investments and you generate income from those investments, it should be taxed at source. This one you will hear about, 3% tax on specified services. So if you offer management, technical or clerical services, as long as the invoice is $50,000 or more, there are particular listed entities, so government bodies and some large companies. Once you provide these services, they will withhold 3% of the value of your service to them and it's a prepayment towards a tax position. Alright? Now all of these deductions within this section, except for the PAYE, is supported by a new system we have, and it is supported by our Revenue Administration Information System platform, whereby they don't even have to give you the document, the piece of paper anymore. Once they deduct the funds from you and they pay it over to us, they create an electronic certificate that attaches itself to your individual income tax return. And that's why we're saying go E. Once you go online, the particular line items in relation to the tax credits will be populated with the amounts that would have been deducted from you. One less thing to worry about. The only thing, sorry, let me digress. The only thing that you'll have to worry about is whether or not they did in fact do the upload. Yes. And since most of the time Jamaican people go bad, you can't bad them up and make them do that, don't it? Yeah man, get them to do the thing for you. No. Alright, good. 3%, so you get the 450. Tax on dividend other than preference dividend from companies in Jamaica for pensioners and persons age 65 and over. You get a deduction, so that generally is not populated. We have other refundable credits, 375. So our total refundable credits come to 1.2. So from a position of 7, we're now at 6, and we take off this 1.2. Tax on statutory income net of allowable tax credits is 5.2. If you pay the minimum business tax, that line item will also be populated. So from a high of 7 to now a net tax position of $5.2 million. I will give you the benefit of everybody that would have made a deduction with respect to your income. The next computation that we're going to do is in relation to education tax. Now, education tax is not paid on pensions, dividend, interest, other distributions, and annuities. So the first thing we're going to put there is the $900,000 that we got from GK. Non-executive directors' fees, education tax not paid on that. We should populate that line item with $1.5 million that we had gotten from sitting on those boards. Now, this is of particular importance, and this is why we were highlighting it. Employment income earned after 65 years. So the form is designed to take off that. So if this person had made employment income at age 65, then this line item would allow for it to be reduced, to reduce the assessable earnings position. So if you notice, we had $31 million as the chargeable income position, but for education tax computation here, you see 24 million. Because we've taken off all those other streams of income that would not be accessible for education tax. And the rate is 2.25%. The tax is $562. We take off the education tax that would have been deducted at source from our employment, which amounts to $70,000. And our net education tax position is $482. So while those are the payable positions, you're getting an echo right here, miss? Oh, I'm not in the control of that. Alright, so while that is the education tax that is payable as well as the income tax, just go back up on that. We want to show you that the payments that would have been made over the course of the year stand to reduce the amount that you're going to pay even further. So while we have assessed that this is now what is payable for income tax 5.2, education tax 482, NHT 670, and we're going to the form. We've now added a form where you can actually work out to see what your NHT and NIS should be. 670, but this person actually made estimated tax contributions over the course of the year. And as a result of that, she experiences even further reductions. So from a high of 7 to now having to come out of pocket with the balances of 2.7 for income tax, 162 for education tax, 370 for NHT. So the balances are checking off. So while it is that we assess what you should pay, effectively that might not represent what you are going to pay based on who you're engaging services with. Alright, so let's go to the NHT and NIS computation, and that is where I will, you will cease to hear my voice and you will hear Mr. Murray. Alright, so there are some questions that you have to answer when you're completing the NHT and NIS computations. It's going to ask you, are you a domestic employee? For one, we don't, this is a self-employed form. And one of the issues that we had was that it was not able to capture information for persons that are domestic workers and they want to pay their taxes. They want to contribute to NHT, they want to contribute to NIS, even though the money is not so much. The legislation says if you make less than 6,200, then we ought not to be taking any taxes from you. So persons that make more than 6,200 per week. So if persons that make 6,201, they have the ability to contribute and pay taxes. But the rates are different. The rates are more in line with an employed person. But it's simply put that this person is making the declarations for themselves and not their employer. So it asks, are you a domestic worker? Are you a Jamaican citizen employed by an embassy? Because the embassies, the soil that they sit on is really sovereign soil. It's not Jamaican soil, even though it is here. So they have no responsibility to do any calculations with regards to any taxation in Jamaica. If they do, it's simply out of courtesy to the employee. But if we treat them as self-employed, then they'll have to experience NIS at 5%, NHT at 3%. But really, within the context of their work, they are employees and not self-employed. Do you have any income from self-employment? And these questions guide what will happen in the summary of the income that is accessible. Now, some years ago, we had challenges in what would be accessible for NHT. NHT would say it is the gross, but that treatment really is only in relation to an employee. If you are self-employed, it is your net income position. And these are the things that you take off in order to arrive at your net income. So, total income from all sources was $31 million. The net tax income arising from employment and offices would be 3.1 because we took off the NIS. And the reason for that, what we want to do basically is to take off all those sources of income that would have been taxed at source, so they would do a double calculation. Domestic employment income, we take off that, embassy, etc. So the total income accessible for NHT would be the 31 less the 3.125. Alright, now we get 20 something. Alright, 30 something. Alright? Then the next thing that we take off is less income not accessible to NHT. So you don't pay NHT on a pension or any investments. So we take off that. And we'll arrive. So the only thing that we take off there is the dividends. Again, it's simply showing you that we're backing off everything so that the computation is done on the correct amounts. Total income accessible to NHT from self-employment before SO4 deductions. And we put the total capital allowance, the covenanted donation, and the NIS that was paid, but there wouldn't have been any because she reached the ceiling from her job. Allowable loss and contributions to approved retirement schemes as well as other donations. So what we've arrived at now is the statutory income from self-employment, because NHT would have been charged on her income from her employment, but it is not on any investment income. So purely what we're looking at now is her net income position from the trading activity. And that is what further NHT will be calculated on. Scroll down. Alright, we'll take off the allowances. So the total income accessible to NHT will be then captured there. Good. Scroll down. So we then give the total NHT that would have been payable, but we deduct what would have been taken from our employment situation to arrive at the net income, which would net NHT payable, which would amount to the 670. Good. Last thing now, and I will hand over to Mr. Murray, the NIS calculation, but there won't be much to do on the NIS because she reached the ceiling from her job. So we're simply just populating the line items to reflect our true position. But we won't do any further calculations because she would have maxed the $75,000. Alright. Now, for any further assistance that you would need in relation to completing the form, you can contact the Taxpayer Education Unit, and we have Taxpayer Education Units in all our four regional revenue service centers. So there's one at the King Street office, there's one at the Constant Spring office, there's one at Mandeville office, and there's one at the Mobile office. And we refer to these offices as revenue service centers because we attempt to do everything in these major offices. The Education Unit can be contacted at TE Unit. This is by email, TE Unit _ so it's TE Unit, Taxpayer Education Unit _ CS, which stands for Constant Spring, at taj.gov.jm. Landline numbers 969-0000, extensions 2990 to 4. CUG number is 838-7648. I will document it further and we'll come back at the end of the presentation to give you the information how you can contact us. But I want to now hand over to Mr. Murray so that he can speak to the refund aspects if you so find yourself in a position. Then he will be followed by our representative from the stamp office, because I know that there are particular aspects of the stamp information that you want to find out. So what we want to do now is for you to jot down those questions, and after they have done their presentations, I will come back and answer them because we're working to be on time for one. Alright, thank you very much.
We thank you for your presentation, Mr. Lennon. But I spoke with Mr. Murray, right? And based on his presentation, it's really directed to persons who are employed and our members who fall into that category. So I was wondering if we could probably get this town person to come forward this time and then we do the question and answer in the interest of time.
Alright, so yes, she is. I will. She's from our stamp office, and she processes most of those transactions that you have to get a valuation for. And I know you'll be rearing a waiting to go. Alright. Alright, so from our Harbour Street office, it's Vivian Simpson will now address you on stamp related matters.
Our members, now this is something that you're really going to need to hear because we all know about the issues with the stamp office and all that.